Hi there. Are you one of those people who have been looking for how best to invest their capital but have been unable to find a suitable way of doing so? Guess what? Lead Capital has got you covered. With their impressive array of financial products and services, Lead Capital offers you the opportunity to invest your capital in a well-balanced portfolio that offers you financial security and growth. With the Lead Fixed Income Fund, your capital is invested for a minimum of 90 days. But guess what? You can be assured that your money is exposed to very low risks and your dividends are paid out biannually. They also have a lead balanced fund that exposes you to slightly more risk than the fixed income fund. However, this fund also offers you biannual dividends, greater returns, and a minimum holding of 90 days. Also, if you are looking to secure your funds from the depreciations associated with the Naira, Lead Capital has a dollar fund that helps you invest your capital in dollar instruments for a period of 180 days. However, they pay out your dividends biannually in dollars. And if you're a big time Odogu looking to invest a serious amount of money, Lead Capital has also got you covered. With the Lead Gazelle portfolio, you could invest a minimum of $1 million for a minimum of 90 days and begin to enjoy some impressive returns on your investment. Also, with an investment of $50,000 to $200,000, Lead Capital PLC offers you the opportunity to hold private portfolios with them, where your capital is exposed to medium risk, your coupons are paid to you biannually, and you enjoy the world of Eurobonds, where you could earn interest on your capital investment in various foreign currencies. For more inquiries, reach out to Lead Capital PLC today with any of the contact information displayed on your screen, or reach out to us via our website at www.leadcapitalgroupng.com. Thank you. Lead Capital PLC, your guide to financial security. Hi there. Are you one of those people who have been looking for how best to invest their capital but have been unable to find a suitable way of doing so? Guess what? Lead Capital has got you covered. With their impressive array of financial products and services, Lead Capital offers you the opportunity to invest your capital in a well-balanced portfolio that offers you financial security and growth. With the Lead Fixed Income Fund, your capital is invested for a minimum of 90 days. But guess what? You can be assured that your money is exposed to very low risks and your dividends are paid out biannually. They also have a lead balanced fund that exposes you to slightly more risk than the fixed income fund. However, this fund also offers you biannual dividends, greater returns, and a minimum holding of 90 days. Also, if you are looking to secure your funds from the depreciations associated with the Naira, Lead Capital has a dollar fund that helps you invest your capital in dollar instruments for a period of 180 days. However, they pay out your dividends biannually in dollars. And if you're a big time Odogu looking to invest a serious amount of money, Lead Capital has also got you covered. With the Lead Gazelle portfolio, you could invest a minimum of $1 million for a minimum of 90 days and begin to enjoy some impressive returns on your investment. Also, with an investment of $50,000 to $200,000, Lead Capital PLC offers you the opportunity to hold private portfolios with them, where your capital is exposed to medium risk, your coupons are paid to you biannually, and you enjoy the world of Eurobonds, where you could earn interest on your capital investment in various foreign currencies. For more inquiries, reach out to Lead Capital PLC today with any of the contact information displayed on your screen, or reach out to us via our website at www.leadcapitalgroupng.com. Thank you. Lead Capital PLC, your guide to financial security.
Michael. Good morning, esteemed listeners and investors. We want to welcome you to the first edition of our breakfast session for the year 2025. I want to thank you for your audience last year as we look forward to a prosperous investment year in 2025. I want to say Happy New Year to all our listeners as I take you around the happenings of the fixed income market. I am Akiyemi Omotayo. Looking at the money market and treasury bills market, system liquidity closed on a negative region as we see funding rates decline to 26.75% and 27.25% from previous week for both open market repo rates and overnight respectively. Activities in the treasury bills market for the year started on a bullish note as investors exhibited renewed buy interest on the back of improved system liquidity. That being said, average yields declined from 90 basis points to close at 25.46%. At the next Nigerian Treasury bills auction, the Central Bank will offer 74.17 billion of NTB. Looking at the results of the last auction, we observed that stop rates remained flat on both 91 days and 182 days. And for the 364 days, rates increased from 22.80% to 22.90%. Looking at the bonds market, for the bonds market, the federal government bond secondary market opened on a quiet note as we see average yields closed flat. And across the yield curve, we observed the short end of the curve increased by an average of 50 basis points week on week, while the mid to long end of the curve declined by 1 basis point on a tenor basis. Maturities that were actually traded, that were marginally traded, over the week were the 2025, 2028, 2029, 2030, and 2033, and lastly, the 2034. For the foreign exchange market, the Naira witnessed a slight increase in value as the NAFEM rate closed at 1,534.05, and on the 3rd of January 2025, as compared with 1,538.25 as at the 31st of December 2024. Next slide, please. For outlook for the week, this week it is expected that the funding rates will trend at current levels on the back of expected outflows, bearing any significant inflows into the system. We also expect the federal government bond to trade in line with system liquidity, as well as the treasury bills markets in view of this week's primary market auction. That being said, we cannot overemphasize the need to invest in the fixed income market space. This market can be accessed using a wide array of products, ranging from our fixed income fund, which focuses primarily on capital preservation and growth. The risk profile on this fund is very minimal, and the dividends are paid biannually. It has a minimum lockdown period of 90 days, and I think it is worthy to note that unit holders of the product have experienced over 100% growth in their investment since inception of the product. For our lead balance fund, for our potential clients and investors who have a knack for equities, the lead balance fund offers a balanced approach to capital preservation and growth by diversifying across 50% of investments in high quality stocks and 50% in money markets / fixed income instruments. The risk profile on our lead balance fund is medium, and the dividends are paid annually. The minimum holding period for our lead balance fund is 90 days. For our potential clients and investors that have a knack for fixed income deposits, we encourage you to subscribe to our lead Gazelle portfolio with tenors ranging from 90 days to 365 days and offering competitive rates that exceed your standard commercial bank deposit rates. For investors that have intention to hedge against depreciating Naira, we implore you to sign up to our Eurobond trading platform, providing our clients opportunities to invest directly in US dollar debt instruments and earning returns in form of coupons in the same US dollar. The risk profile on this platform is medium, and the coupons are paid biannually. It is worthy to note that the minimum investment threshold for our Eurobonds is $200,000. For our investors who may not be able to meet up to the $200,000 threshold, we are glad to offer you our lead dollar fund. This product has a minimum subscription fee of $1,000 and a minimum holding period of 180 days. Dividends on this product, on these products are paid biannually, and it comes with a very low risk profile. That being said, please let me hand you over to our seasoned in-house stockbroker, Mr. Taofeek Akolade. Mr. Taofeek, Happy New Year, and over to you.
Thank you, Mr. Omotayo. Thank you, everyone. Thank you, valued investors. I also use this opportunity to say a complimentary season to all our lead investors. We appreciate you for your support since the inception of this program. He has rightly said this is the first edition of our money market program, the first section. So we'll take through what we are expecting, and we'll also take a recap of what we did in 2024, because it's important we reflect on how we did in 2024 and what are the opportunities, what are the actions we should be taking as investors in this 2025. Of course, we had Last week, we had just 2-3 trading days, the second and the third, because of the New Year public holiday declared by the federal government. But looking at the graph, the ASI, which is the key broad market index to track how the market is moving, we could see that from the previous week, from the Friday, we could see some movement in ASI on a bullish trend, and we expect that is likely to continue this week. ASI was on a positive note, and then we also saw the NGX 30, which is more of another key index that also measure market performance. Just like we look at S&P 500 when we are looking at the global equities market, that's from the US. The NGX 30 also track the 30 most capitalized stocks. So from time to time, we'll continue to mirror NGX 30 and ASI, so that because these are the companies that people are also investing. So let's just look at a recap of 2024. In terms of ASI 2024, our year-to-date performance, we recorded 37.65%. And then when we look at it in terms of real of return as the figure of inflation we saw in November, though it was marginal in terms of the positive, about 3.365%, but inflation as at the month of November, we haven't seen inflation for the month of December, but in 2 weeks' time, that will be released by the MBX. But we are also hoping that we should expect a little moderation in inflation, because we are also seeing some moderation in the price of the PMS, and then we also expect more. So in terms of real rate of return, we are not in negative zone, which is also good for us. We also expect more. But one thing we should appreciate about our markets and our investors, we should also give that kudos to you, that the ASI opened 74,773 in beginning of 2024. And then we could see that at the end of the 2024 December, the last trading day, we were at 102,926.40. Looking at in terms of basis points, market recorded 28.152.63 basis points. And then when you also look at, take a reflection of what they did in 2023, we opened market in 2023 with 51,251.06 basis points. And then 2024 was higher. And then we also expect that this 2025 is also going to be better, because from that time, we've seen some of the listed companies that they are dishing out good performance, and that is what drives the market. If you also see the graph below, it's showing the stability in the equities market. Of course, volatility is very, very important, but it has upside risk as well. So we've seen that from the from the first quarter of 2024 to the end of December 2024, before we recorded 37.65% as year-to-date return, we've seen some stability in our equities market, which is a good reflection, and it's good for our economy. It's good for the equities investors, because high volatility is also very inimical to the equities market, to the economy, because you'll be looking at it that you are making money. But that volatility may not really spread across all the listed companies in our market. If you see the first quarter, the market was driven by the corporate actions. The third quarter, the market was also driven by the corporate actions, which is the good things the investor should consider when you are investing in our equities markets. Looking at NGX 30 for the year 2024, it also closed 36.66%. NGX Banking also recorded 21.3%. NGX Oil and Gas, 160%. We saw a lot of development in the area of a merger and acquisition, assets acquisition by some of the major upstream oil and gas sector or companies under that index. So NGX Consumer also recorded 52.20%, and the NGX Industrial recorded 31.47%. NGX Premium Index that has an almost 8 stock under that index also recorded at 3.85%. NGX Pension 39.06%, and the NGX Main Board also recorded 42.85%. When you look at this performance, we could see that we also did better than what we did in the previous year. And what has been driving this performance across major indices is because of the company performance. When companies are bringing out good results, you see a lot of buy interest, both local institutional investors. They will continue to buy in that market. So the graph we have seen is a good reflection of our equities market, and then we'll talk about the outlook in the subsequent slide. So we know, because of time, this slide is just telling us is that we've also started the ASI on a positive note, and our year-to-date performance within the 2 short trading days we had last week, we are 0.64%, and ASI has also gone up to 102,133.0, 103,586.33%. So if you look at other indices under that for the last week, we have four major indices under our coverage recorded positive, and then our year-to-date performance 0.64%. Month-to-date is also 0.464%. So we expect to see bullish trend in the market this week because we're in the first quarter of 2025, and then anytime from now, you see announcement from the company secretaries from most of the listed companies coming out with the time they are going to make, their board will make to consider the account and the dividend declaration. So this is what this graph is also talking about. And then we've always been discussing this projected scorecard for bank capitalization. Last year was dominated by the primary market activities around the banking industry because of the capitalization. So those one in the blue color, the First Bank Nigerian PLC and the UBA, today is the last day submission for the rights offer. We are encouraging all our value customers that have not completed their form. We still have the Grace 12 noon today. If you can send it, you will still meet up. But I've also encouraged people in the previous time that you can also sell the First Bank. If you have taken that action, you can advise us. We can use that same process to subscribe for the FBN right for you, and then you'll be better off with about almost 8% gain. So you still have that window open till 12 noon today. Please fill your form and send it to us. We'll see receive it and I'll remit it to the issuing houses. So thank you. Please do that. In terms of a final year expectation for the 2024, anytime from now, I said it, we will begin to see companies coming out. And then we have seen that we have like almost 16 companies, tickers, we have recommended that investors should continue taking advantage. And we emphasize more on analyzed yield. Analyzed yield in the sense that your holding period is less than 90 days. The Q1 of 2025, before the end of March, you see companies declaring their dividends. So if you are investing in such company now, you only consider analyze this as a dividend. You will not look at the final dividend because dividends yield can only be considered about those who are invested in 6, 7, 8 months time. But you are just coming out as a new investor in some of these tickers. If you are investing in Access Bank, we are expecting from the result we have seen in the 9 months, Access Bank is like we are projecting 180 kobo. And if you look at analyzed dividend yields, we are better off with about we are going to corner almost 22.35%. GTCO 24.01%, United Capital 19.50%, UBA 17.3%. If you look at 1 to 16, you will not see any tickers whose dividends, analyzed dividends is less than 9%. So we are still better off because for 90 days, if you can be any this kind of analyzing within 90 days, I think it's a good deal for you. There's not any instrument that can give you this return in 90 days. But we're encouraging you that don't be left out. Don't look at the prices that are on the high side. Prices will continue to move as companies are bringing out good results. Everybody wants to be part of the blue chip companies that are doing well, that are also coming out with a group branding. So let's look at these tickers and take advantage. If you have not been taking action, please, let's do that now. Next week may be too late. 2 weeks time may be too late because as we are moving towards the dividend declaration period, you see a lot of people coming into these tickers, and it's better for you. So let's take advantage of these companies we have projected that their final year dividend for 2024 will be better than what they did last year. So it's not too late. Let's take advantage of that. So, and then in terms of our recommendation for the week, we are having numerous recommendations, about almost 55, but this is just an extraction. 1 to 27 cut across banking, insurance, in consumer, oil and gas, and agriculture. So Access Bank is still good buy. FBN, FCMB, GTB, UCAP, UBA, Stanbic, Zenith Bank, ICO, Custodian, Master Insurance, Dem Insurance, Boa Cement, Dangote Cement, WAFCO, Boa Food, Nigerian Breweries. 1 to 27, you can take a good deal. They are good buy. Looking at it from the point of valuation, which this capital stand for from time to time. We'll continue to recommend based on recommendation, based on the fundamentals. We are not, of course, sentiment will play out sometimes, but important variables, metrics will be considered. Is looking at those key metrics that drives equities price. So if you are investing in any of the banking, insurance, you have few listed companies you can take from this recommendation. While 28 to 30, we are placing Nestle, Airtel Africa, and Cadbury. We're also placing them on hold. And then 31 to 36, we are also putting it on sale because we still see those stocks prices as overpriced. So African Prudential, Conrad, Eternal, Girigo, Transcorp Hotel, and then Transcorp Power, in our recommendation for this week, we are placing it on sale. However, if you check our daily market report, we still change some of these tickers as information filtered into the market. When we see any action that will drive the price or drive the recommendation from the buy to hold or to sell, we'll do that so that within the week you can also take action. You may not need to wait to the end of next week before you see another recommendation coming out from Lead Capital. But you are good to go with these recommendations for the week. And that has been sent out from our research department to all email of our valued customers. So go through it and take advantage and before it is too late. Our expectations for the week, because of time, we anticipate buy interest outweigh profit taking in the upbeat market this week. We also expect market activities and investors will continue to take position on stock that also present good entry price in anticipation of corporate action. Corporate action will start coming out, and everybody wants to be part of the investors that will also corner away good dividend declaration from some of these blue chip companies. So it's not too late. This may likely lead to upbeats that move ESI towards green zone. We expect ESI is going to close on a positive note this week. We also expect the broad index is going to move towards 105,000 basis points. As we have seen that in the previous year, ESI has been gained up from 1 year on yearly basis because companies are bringing out good results. So what actions should we be taking as investors? It's very important to consider this. Investors should accumulate blue chip companies and fundamental sound stock in their portfolio. It's not too late. You can do that. You can be part of the people benefiting from the first quarter dividend declaration from this company, because with what we have seen so far, they are very, very impressive. And if you have not been part of the people that will buy all this stuff we have recommended, you are losing. So take advantage of the current market price of those tickers. Investors can also realign their portfolio to accommodate good dividend yield stock for better return. This is the time you can sell out companies that have not been declaring dividends in the last 5 years. Put them away, put them out of your portfolio and bring in good stocks that can give you better return in the area of annualized dividend use, and you are better off. And it's going to improve your financial liquidity, and then you will be able to cash out more money from those investments. So I think we should focus on this action as investors this week. So if you do that, take those actions, we believe strongly that you are going to, you'll be spending to banks by the time these corporate actions are coming out into the markets. So we have come to the end of presentation this morning. So it's time to entertain a question and answer. Okay, somebody is asking a question. Good morning. Why are you putting MTN on buy despite operating loss? If you look at the last recommendation, we put it on buy. The last 9 month result we saw, they are moved from the negative zone to the positive zone in terms of their profits, though it's marginal. But the good things we have to note about the MTN, that the news has been filtering into the market that the NCC is likely to increase the rate. If they increase the rate, what is going to happen? It will increase the profit of this telecom industry. So when that increase is also going to impact on their income line. And then by the time they increase the tariff of the telecom companies that are also listed, we expect better performance from the MTN. So it's going to be a win-win situation for the MTN and investors who have also taken position in that company. That's why we are putting in a recommendation, not on any other sentiment, but those information we have seen. Most banking stock are buy. Don't you think their banking insurance companies are overpriced? They are not overpriced. What continues to drive the markets or a stock of every sector is that we are expecting good performance. When you see the 9 month result, we are seeing the likes of if you check our recommendation around November, a customer was around 11 naira, and we did mention it that take advantage, because at that time EPS stood at 9 naira, 3 naira, and then the stock was trading almost 11 naira. EPS at that time was almost 25%. So people are beginning to see that this company is looking promising. That's why they are taking advantage. All the banking stock are not overpriced based on the metrics we have used. So you can continue to invest in banking stock. They still present good entry price. They are not overpriced. Why should we be expecting equities market where we should expect some positive movement in equities markets. I've said it in our earlier presentation that we are likely to see some moderation in the inflation in 2025. It may not be in the first quarter, but we have also seen moderation in the price of PMS, and PMS drives the inflation, constitutes major component of the inflation. So if PMS is coming down, we are likely to see some markets, what they call the inflation coming down. And then the most variable that usually affects equities market is inflation. If that continues to moderate, we are likely to see more investment in equities market. So it looks very positive. If we also look at 2025 budget, they are proposing almost 16.5%, 16.5 trillion as a capital project. That will also drive industrial segment, industrial index of the equities market. So tickers under that index will continue to also dish out good results because they will benefit from some of those road contracts that will be awarded by the federal government. Okay, somebody is also asking, so for the outlook for 2025, we are good to go. We expect a better performance in the equities market based on the results we have also seen. In addition to that, we should also expect a robust banking activity in 2025 because of recapitalization. Like almost 7 banks now, they are fully recapitalized to the tune of 500 billion and 200 billion. What we expect from those banks is that they are going to be bringing out good performance because they have more capital to compete for local international businesses, and that will reflect on their income lines. Recommendation for this week, penny stock. If you check our recommendation, you see the likes of ICO. ICO is still a penny stock from us, and then the UPDC is also a penny stock. It's not only highly and middle capitalized stock. We have also recommended low capitalized stocks in our recommendation. Okay, somebody is also asking, good morning, please, when will mutual benefits resume trading? As long, okay, resume trading, and when will the bonus share, okay, listed? Okay, well, for the mutual benefit, as long as they have refused to fulfill the obligation requirement from the NGX, they will continue to be suspended. But as soon as they're able to come out with their account and some of those things, the fine and sanction imposed on them by the NGX, once they're able to fulfill those obligations, they will be released. For the regency assurance, we'll find out from our registrars in our next presentation. We'll give you more information as at the time they are going to credit it. But can you talk about the BUA Cement? BUA Cement, if you look at it, is also part of our recommendation. In terms of dividend yield, it's very low. But the good thing is that every sector, every index we have in our market, they have their own advantage. I've said is that the budget for 2025, 16 trillion is for the capital expenditure. And then major component of the capital expenditure from the federal government is the road construction. Minister of Work has said that the road construction going forward will be majorly on the bricks. And what they are going to use as instrument, as material for those road contracts is cement. So companies, stickers under industrial, the likes of West African Portland Cement, Dangote Cement, they are going to benefit because you'll see more sales from their materials, and that will translate into the good performance in their income lines. What are the industrial and consumer industry likely to recover from the FS losses? The good thing is that most of the companies now, Nigerian breweries, they've done right issue, and the right issue has been very successful. I think they have also listed those shares. It's going to give them more money to be able to also to augment their working capital. But I think companies now have also been able to bring out new measures. They are also investing in the backward integration strategy, and Flour Mill did that. That was the reason why the Flour Mill and the NASCON Island Company, that's the National Salt Company, they have not been recording losses in the area of FS. I think going forward now, you see companies reducing their FS losses because they are investing more in the local materials to drive their operation rather than depending on the volume raw materials. So we should expect better performance in the companies under NGS consumer in year 2025 and beyond. Also, what is the observation about Dangote Sugar and BUA Cement? I've talked about the Dangote Cement. Dangote Sugar, we also put it on hold. We'll continue to monitor activities in that area. What drive Dangote towards that 70-60 at a point in time was because of the acquisition they were trying to do with the NASCON and Dangote Rice before SEC put it on hold. We have not completely ruled it out from our recommendation, but for now, we are putting Dangote on hold. So we'll monitor activities around Dangote Sugar. If there's a need for us to change the remarks and the status to buy or to sell, we'll do that. Someone say, can you analyze about 10 insurance company we can see more in what investing? The good ones are in part of our recommendation. NEM Insurance is there, ICO Insurance is there, Answer Merchant Insurance is there. So, and then which other one? I think NEM, ICO, Consortia is also there. Consortia is even into several other businesses other than the insurance. So I think you have like almost 4. We don't consider penny stock. We are not being sentimental. If a stock is 40 kobo and we have seen the result and the valuation is doing well, we will recommend. We did that for the UPDC when the stock was almost 130 kobo. You can see the price is moving because the company is been bringing out good performance and good results. Okay, can you comment on Shino Assurance? Well, it's not in our recommendation, and the reason is that there have been some information that's also filtered into the market that they've also witnessed some vulnerable investor in that company. So from us, from Lead Capital, we didn't recommend it because now that somebody has also brought it up, we're going to conduct more analysis on Shino Assurance. But for now, it's not part of our recommendation. Okay. Do I have anybody that wants to? Okay, in the absence of further question, comment, and observation, we would like to bring this section to an end. Once again, we would like to say thank you to all our valued customers for the trust and the confidence they have in Lead Capital Group, PLC. We appreciate you. So enjoy the rest of the week. The recommendation has been sent out to all our valued customers this morning. If there is need for clarification, observation, or any other further insights, reach out to us through our customer service line. So once again, good morning to everyone. Do enjoy the rest of the week. Bye for now.